So
Mhm.
welcome you guys. It is your favorite local real estate expert, Joanna Arnold, right here in Baton Rouge, Louisiana. And today we are starting our first series of Money Mondays Real Estate Edition. So in this live, we are going to be talking about different strategies that you can use in our current market that we're facing. As everyone knows, interest rates are higher than they have been within the past 2 years. So we want to definitely give people some perspective on some different strategies that they can use. So today we're going to be talking about the 2-1 buy down strategy with the Jason Johnson out
Hey.
of Phoenix, Arizona.
Mhm.
He is a great lender that I met through a great realtor in Phoenix, Arizona, Miss Christy Lott. And he has been educating me, you guys, tremendously on different strategies that can be used in our real estate world. So Jason, I'm gonna let you go ahead and introduce yourself.
Thank you. Thank you, Joanna. So, like Joanna said, I'm here in the Phoenix, Scottsdale area. I've actually been in this industry for, man, I hate to say it, but it's been over 25 years. Started way back in 1996, is when I did my first loan. And believe it or not, the interest rate at that time, a little bit over 12.5% is my first loan that I did. So it was a lot higher
Wow.
than what it is today. Uh, but licensed in 35 different states, Louisiana being one of them. So definitely licensed in areas near you, Louisiana. I'm in Michigan, I'm in Jersey, New Mexico, North, South Carolina, Florida, just to name a few. So
Wow.
if you think about it, if you're looking on this, if you're on this line right now and you think that I might not be licensed, just give me a call. I probably am.
Or you'll get licensed, right?
Or I'll get licensed. Absolutely. I'll definitely do that.
Right. So we're gonna go ahead. Tonight we have a Saints game. So I'm gonna tell you now, at 7 o'clock, Louisiana about to shut down. So we're gonna go ahead and we're gonna jump straight into it. So Jason, what exactly is the 2-1 buy down
Mhm.
strategy?
So the 2-1 buy down, the way it's figured just like a 30-year fix. So nothing different there, not an ARM product or anything of that nature. Uh, it's figured off of the 30-year fix and that first year. That first year, what you end up paying is, instead of paying what you qualified for, and let's say 7%, that first year you pay 2% lower, hence the two portion of the 2-1. That second year, after the very first 12 payments, you would then go to a 1% lower payment. So if it was 7%, that first year you would actually have a payment of a 5%. And then the
Mhm.
second year, you will have a payment of a 6%. So you end up with a lower payment, and it's very beneficial to help get you through this high interest rate market until interest rates come back down.
The hopes of possibly
Right. The
refinancing by the
hopes.
third year, correct?
Exactly.
Okay.
Exactly.
Okay. So let me ask you this. How exactly does that work? I think, we hear it all the time, like the 2-1 buy down strategy, but
Mhm.
I think a lot of people don't really know how it actually works. So can you give us more insight about that? Like, how does it work?
Absolutely. So the way that it works, and I'm just going to share my screen here so that you guys can
Okay.
see it. Are you able to see the beat the high interest rates?
I do. I see
Okay.
it.
So basically the way it works, and this is figured on a
Wait, Jason, hold
450.
on. I think
Mhm.
I see an email.
No,
And I see like yeah,
then you're
I
on the
think you're on
wrong
the wrong
one.
screen.
Yep. Let me
Yeah, you're
go
on the
to
wrong
this one
screen.
then. How about now?
There we go.
Okay. Apologize for that.
No, you're
So
good.
when we're looking at this 2-1 buy down, this is actually figured on a $450,000 loan. And you can see this is a qualifying rate of 6.5%, 30 years, and the payment would be 2844.31. So that very first year, if they do the 2-1 buy down, in order to qualify for it, first off, the borrower has to have a 660 credit score or above. So
Okay.
as long as they've got a 660 credit score or above, they would qualify. They can do it on a FHA, they can do it on a VA loan, or they can do it on a conventional loan. So
Okay.
we apply the 2-1 buy down process to it. And that first year, instead of paying that first year payment of 2844, it drops it down to a 4.5% payment, which drops that payment down to 2280, saving that borrower $564 that first year. And then that
Got it.
second year, it drops down to a 5.5%, with a payment of $25.55, and it saves that borrower $289.26. So there's a huge savings for that borrower, and it allows them to save $6,770 the first year, $3,471 the second year.
Got it, got it, got
Mhm.
it. So I see where you have the savings at, like it says, seller concessions
Mhm.
on both years. So is that, I guess we can go into that part of it. That would
Yes.
be concessions paid for the buyer from the seller, correct?
Yes. Because understand, this is figured off of a 6.5% interest rate. And because it's not an ARM product, that 6.5% still has to be paid, but it's not the buyer that's paying it. It's under seller concession. So that seller has to give and agree to $10,241.88 seller concession, which is actually a seller paid buy down. So
Gotcha,
once they
gotcha.
agree to that, that's where that money is coming from because it's still amortized over a 30-year period of time. So nothing's getting
Gotcha.
tacked on the end. This is 100% to the buyer's benefit.
So one thing that I'm thinking when I see this, because I know a lot of times in, especially in the current market that we're in, and maybe if you have a first time home buyer who hasn't really purchased a home before, the first thing that they think is they want to negotiate the price down, right?
Mhm.
Right. So, like, say for instance, we go in, a house is 450,000 and we're dropping it by $10,241 to 440,000.
Right.
That doesn't really save them as much as this would save them over a 3-year time period, correct?
Correct. Correct. And I've got an
Okay.
example of that. I mean, if you were to drop that actual purchase price, and let's just take this $10,000 that we're talking about here and just use these numbers. So if we're looking at a $450,000 loan, of course, the purchase price is going to be at 473. Okay. The
Mm-hmm.
borrower's putting down, let's say, 5%. So if they're putting down 5%, that's how we're coming up with that $450,000 loan amount right here. Okay.
Right.
If we look over here, if they were to just lower the actual purchase price, they went from 473 down to 463. Most people will say, well, heck, that's a pretty good benefit. But it takes
Mm-hmm.
that purchase price down to 463, 443. And now the mortgage payment has dropped from the $2,800 that we were looking at before down to 2782. And if
82.
we did the actual numbers, it's a $61 savings for that borrower. So the borrower saved
Yeah.
$61 because you decided to lower the purchase price. Where if they did the 2-1 buy down, they're saving $564 that first year, $289 the second year. There's so much more
Exactly.
benefit by doing this. And it's also a win for the seller because they keep the purchase price up at 473.
Exactly. That's the point that I was just about to make. It's beneficial for the seller as well because they're still getting, they're not dropping that price and still having to pay concessions because that's more than
Correct.
likely going to happen anyway.
Right.
So it's remaining at that same sales price and it's being beneficial to the buyer as well to help them buy down, to do the 2-1 buy down. So that makes a lot of sense. So let's see. Are there extra costs for this and who pays for it? I think you kind of went
Mhm.
over a little bit,
A little
but
bit.
what are the extra costs? Yeah, what are the extra costs that people can expect to be associated with doing something like this?
So the only cost that's given is the actual seller concession. The seller concession ends up coming out to that $10,000 mark that we were looking at on this one. So it's $10,241. There aren't any extra costs to the buyer unless the buyer wants a lower interest rate. The buyer still can put forth money to buy the interest rate down even lower if they wanted to.
Oh,
Uh,
okay.
so
So you can
that
still buy the points down with doing this?
Yes, you can
Okay.
still buy the points down for the buyer. If they wanted to go lower, they can go lower because it's actually, even though we have it under seller concession, it's actually called a seller buy down. Because we have
Mm-hmm.
this under seller buy down, it's not figured into the points and fees structure like a seller concession, where seller concession has to go towards points and fees. Uh, this
Sure.
goes towards buying the interest rate down for the borrower uh, to that 2% and 1%, or for that second year of that 1%. So if the borrower wanted to start off instead of 6.5 in this, case, they wanted to buy it down to, let's say, a 6%. Their first year
Mhm.
would be 4%. Second year would be 5%.
Got it. Got it. That make a lot of sense. It
Mhm.
does. I mean, especially in the market that we're in, because I think people are so terrified right now with the houses sitting on the market and
Mhm.
continually having to make price adjustments.
Right.
I think this is definitely it's a win-win for both parties. And I know for me, I'm always trying to make sure that the transaction is going smooth for everyone. So having a strategy like this is really a game changer that I think a
Mhm.
lot of people really aren't being educated on. I hate to say
Right.
that, but but that's the truth. Like people aren't being educated on the tools and the strategies that we have. So I
Mhm.
mean, you're paying 5%, well, 4%, 5%, like you said. But then in that third year, hopefully when the economy changes a little bit and interest rates are lower, you'll be able to go ahead and refinance and take advantage of an even lower rate.
Right.
So yeah, that's definitely to me, that's definitely a win.
And then on
Um,
top of that, you also have to pay attention to any of the added to add on to what you're talking about with the fees, any of the added fees that that company may have. Because one of the things that we strive and we make sure that we don't have here with our company, Wyndham Capital Mortgage, we don't have any of the lender charges of the application processing, underwriting, credit report fees. I mean, that tax on an extra 15 to $1,700 in fees, and we just don't have those. The only fees that we have are just your title company fees. So with us, it's just a win-win for both the buyer and the seller.
Yeah, that's a game changer, Jason. That's definitely a game changer.
Mhm.
So I do have one more question. I do have
Mhm.
one more question.
Okay,
So will a borrower have any prepayment penalties? So say for instance,
excellent.
they
Mhm.
don't stay for 3 years,
Mhm.
or they don't stay for 2 years. They have to relocate. Life
Mhm.
happens. What happens to that borrower who took advantage of
Right.
buying that rate? Yeah, doing that 2-1
The
buy down.
Fantastic question because a lot of companies have a prepayment penalty, especially with this type of program, because it's advantageous to keep them into and get to that third year. But with us, we have absolutely no prepayment penalty. They could pay off as soon as they want. And if you can think about that $10,000, basically the way that that works is they're going to put that into an escrow account.
Mhm.
And that escrow account's going to dwindle down month after month in order to make that 6.5% payment. So
Gotcha.
let's say a year and a half into it, interest rates are low enough. We come in, we do a refinance. Well, you still have half a year sitting in an escrow account. Now, Joanna, when anytime anyone does a refinance or anything of that nature, escrow accounts, that's the borrower's money.
Right.
So they get that money back. That money comes back to the
Oh,
borrower, even though the seller put that money in there. The seller
right.
put
So
that
they get
money
that
in
back
there.
because it's been escrowed to cover the
Yes,
2-1 buy now.
absolutely.
Okay.
Because they're paying it off early. We've got to close out that escrow account. That money goes back to the borrower. That's their money.
All right. They can
It's
use
just a
that to
beautiful
move on to the
program.
next
I
house.
just, it's just
Right.
a very, yeah.
Why we didn't have this before this happened? Like
I mean, interest rates were so low. Could you imagine when we were at 2% and having a 2-1
right.
buy down? What's your interest rate? Zero?
Zero. Zero
No.
point zero negative.
Right.
Let me go. I want to go on Facebook. I want to make sure that we don't have any additional questions. Do you
Mhm.
have, that was really all the questions I have for you. I think you explained that so well and showing the breakdown
Mhm.
of actually, what that would cost and how it actually works. I think it'll definitely be beneficial to a lot of people. You have anything you want to add while I look to see if we have any questions?
Well, I would say the one thing that I will add, not necessarily talking about the 2-1 buy down, but just one of the things that I really enjoy about working with you, Joanna, is that you're a family-oriented person. And that's what I look for in my business. And I've been doing this for over 25 years. So anytime that I see your post on Facebook or anything, I'm always trying to pump you up as well. And some of the other realtors trying to pump you guys up. And it's to me, we're one big happy family. I take care of you guys take care of me as well. And with these type of programs, what I really strive and build my business on is the fact that I actually care. You're more than just a number to me.
Right.
Uh,
Right.
it's not just a loan. And if I can help build wealth and build a long-term relationship with these borrowers, that's what I'm looking for. That's what I look for in
Exactly.
every aspect of everything that I do. So I really love this 2-1 buy down product just because of where interest rates are. And I hear so many times of individuals saying, well, I'm going to pull out and I'm just going to hold on. I'm going to rent for a little bit. And I think you and
Mm-hmm.
I shared this. And I always came back and said, I mean, if you're looking at renting, what is the interest rate when you're renting?
All right. That's
It's
100%.
100% because
A
100% of
mortgage
the
is
money
getting
that you're
paid. It's a
exactly so
mortgage is
much.
getting paid. It's just not yours.
Right, right,
Yeah.
right. So instead of renting, get out of renting. And we have a saying here at Wyndham Capital, uh, divorce your rent payment and marry your mortgage.
Hmm.
Get out of renting. Just stop.
And it is, like I tell people all the time, real estate is the number one, the number one way to create wealth.
Mhm.
And sometimes I think that people think when they're purchasing a property for themselves that they don't see that as an investment, but it
Mhm.
is an investment over time as you're paying that mortgage as you're appreciating and that property is appreciating. You're doing simple little things to bring the value up over time. You have built a lot of equity in that property
Right.
when you do that, and you have the opportunity, like people have done these past 2 years,
Mhm.
to really cash out. So I always tell people,
Right.
think of it as an investment. It doesn't have to be a forever home. It
Right.
doesn't have to be something that you're stuck in for 30 years. I know it's rare. And I know, back in the day, people maybe lived in houses for 30 years. And there's nothing wrong with
Mhm.
that at all.
Yeah.
But I know now, as the world changes and so many opportunities become available, living in a house for 30 years is very rare, from what I really see. So
Right.
just a side note, I just want to tell everybody that Jason is awesome. He literally calls me every week. He has a
Mhm.
different program to talk about every week. So he's helped me to step my game up as well. I was already well versed when it came to different financing options for my clients, but just having him as a tool in my back pocket to help me really understand the strategies and be able to utilize them in different situations has definitely been a game changer for me as well. So I do thank you for that. I
Absolutely.
thank you for coming on here tonight. Well, tonight
Mhm.
for us. I know where you're at. It's a little earlier, but that's really all that I have.
Okay.
But what I want you to do is tell everybody like where they can follow you, where they can call you, and all that
Mhm.
good stuff.
So if you want to just sit down and talk, it doesn't, even if you think you don't qualify, that is okay. I'll help you. I help everybody. I'm a mortgage consultant. That's what I do. So if you want to get in touch with me, you can always contact me. My telephone number first off, 602-761-9469. My cell phone, I give it to everyone, 941-504-6090. You can email me at jason.johnson@Wyndham, and it's spelled just like the hotel, Wyndham, but we are not affiliated. Got to put that in there.
Right. Make sure you put that in
So
there.
absolutely, because I'll hear that. WyndhamCapital.com. And you can follow me on Facebook under Jason Johnson. And I'm on Facebook, I'm on LinkedIn, and I'll actually send over. Once this actually posts, I'll actually send it over and put that in the link.
Okay, and I'll make sure, yeah, and I'll make sure to put
Mhm,
it in the comments once we share it. Once again, I thank you for tuning in and
mhm,
just, sharing your knowledge and educating people on some of the strategies that they can use. I feel like it's very important in its current market to kind of shift the dynamic because most people
mhm.
are afraid. They're afraid, and you're more afraid when you don't know. So I feel like it's good for people to know that there are options. Like if you feel like this is such a high interest rate for you, then you have an option. There
Right,
are options out there for you, and you don't have to feel like you're forced into doing something that you can't financially afford.
right.
So that is all we have. I'm your favorite local real estate expert, Joanna Arnold, right here in Baton Rouge, covering New Orleans. Y'all can follow me here on Facebook, also on Instagram at Joe Knows BR, and on the Twitter at Joe Knows BR. So thank you guys for tuning in. Any questions, concerns, feel free to drop your comments and we'll make sure that we take care of them and answer them all.
Thank
Bye-bye.
you very much, Joe. Bye bye.